In today's video, I'm going to teach you how to enter a loan in QuickBooks online. We'll walk through setting up the loan account, recording the money you received, and entering each payment so your books stay accurate and audit ready. First, create a place to track what you owe. Open Settings, the small gear icon, choose Chart of Accounts and click New. For account type, pick long-term liabilities if the loan lasts more than a year, or other current liabilities if it will be paid off within a year. For detail type, choose Notes Payable. Give the account a clear name like bank loan so you can recognize it later. Then select Save and Close. This step builds the liability account that holds the running balance of the debt and keeps it off your income statement. Next, record the cash you actually received from the lender. Click the plus New button and choose Journal Entry. Set the journal date to the day the funds hit your account. On the first line, debit your bank account for the amount received. On the second line, credit the loan liability account you just created for the same amount. Add a short memo so you remember what this entry is for, then save and close. Debiting the bank increases your cash, and crediting the loan records the obligation you now owe. Finally, enter your repayments so principal and interest are separated correctly. Click plus New and select Expense. Use the bank or credit account you pay from and set the payment date. In the Category Details section, put the loan liability account on the first line for the principal portion of the payment. On the second line, choose interest expense for the interest portion. Use your amortization schedule or the lender's statement to split the amounts because the mix changes over time. Save and close. Remember, only the interest shows up as an expense. The principal is not an expense. It simply reduces the loan balance. A few quick tips as you go. Keep names consistent so multiple loans don't get mixed up, and use clear memos and attachments for statements if you need extra documentation. With these entries in place, your cash, liability, and interest expense will all land in the right spots, giving you clean, reliable financials. Be sure the dates on your journal entry and expense match the actual funding and payment dates, and avoid using income or expense categories for principal by mistake. Accurate dating and categories keep reconciliations smooth and prevent overstating expenses. If you're unsure about the principal versus interest split on the first payment, refer to the amortization schedule from your lender or check with your accountant so the balances stay correct.